Hello to all of the supporters of 369 Financial. Hope you had a great rest of your 2024. Heading into 2025, I mean business. I always wanted to do that, but I wasn't sure it would work. I wanted to get into something a little bit more comfortable because 2024 has been an exciting year. 2023 was a great year. Obviously, we want to forget about 2022. That was a little scary. However, I'm happy about the strategic adjustments that we made when everything was going down so that we can reap the rewards on the way up. A couple things I want to look into are high price to earnings ratios, looking at deregulation. We have a dollar that's increasing in value, and those are the sort of things that we want to be aware of heading into 2025. No matter what, when it comes to investing, a lot of people have been conditioned that they just need to keep putting money into the same investments over and over, year after year, regardless of what the price of the investments are. The price that you pay for an investment matters, and right now with price to earnings ratios being pretty elevated, we want to be aware of where we're putting money and when to play offense and when to play defense. Right now kind of reminds me back in 2020 when I saw a 1998 used Corolla selling for like $10,000. I don't know if that's accurate or not, but I know prices in certain areas can get a little crazy and out of balance sometimes. And the investment markets are no different than anything. Sometimes they become cheaper than they need to be, and sometimes they become more expensive than they need to be. So we are taking all this into consideration when determining where we want to make any strategic shifts with your investments, or if we just want to remain patient and let the market come to us rather than us go to the market. One of the biggest topics that is going to be on the main stage now is deregulation. So making the economy and the United States more business friendly, including for people like myself, to help us continue to drive the economy, to help us become more profitable, and ultimately bring more dollars back from overseas accounts back into the United States to help our economy continue to grow at a reasonable rate of return. Some people may remember this, some of you may not remember this, but a little thing called Reaganomics, when President Ronald Reagan came in the office, is to make the world have a little bit less rules and regulations to help drive the economy. And one of the biggest people that benefit from this sort of adjustment are those who are investing in the markets. And the people who aren't investing in the markets are going to find themselves falling behind year after year because inflation is always there. Not only is deregulation going to be a topic of discussion, right now the United States dollar is really strong. And that is a good thing for some things and a bad thing for other things. If you're looking to travel to another country and take an exotic vacation, that's a good thing because the dollar is stronger and you can purchase more goods in those countries. For other countries where their currency isn't doing as well, sending those things over to America or looking to buy American goods is going to be a lot more challenging. And ultimately, with all the global tensions that may or may not be going on with these tariffs and these trade wars that you may have forgotten about over the last 5 to 8 years. Those are the sort of things that we want to be watching for and making sure that we are avoiding as many things as we can avoid, but ultimately you can't miss everything with the markets. I mean, ultimately there's going to be more good times than bad times, and you can't have the bad times without the good times. Over the last 5 years, it's been very interesting for investors. If you started investing at the beginning of 2020 versus if you just waited 3 months, you have a much different investment return over the last 5 years. If you started in January of 2020 versus October of 2022, you are also seeing a much different outcome. Right now, depending on your timing of the market over the last several years, short-term investors have actually been outperforming the longer-term investors depending on when your start date is. However, we know the market is a voting machine in the short run and a weighing machine in the long run. So even though we might have seen some AI companies skyrocket, it doesn't mean that they're going to continue to skyrocket or be around in the next 5, 10, 15, 20 years. Maybe you remember a company like Enron or even General Electric. Those companies were doing quite well for a long time and they were some of the favored investments on Wall Street, and eventually, because they weren't doing the best thing for their company and the best things for their customers, and they were doing some shady things, eventually they tumbled. You know, like anything, there's going to be some bumps along the way. I know we've hit some bumps in December, and something really cool I've been seeing with our investment portfolio is that when the market is selling off, a lot of the investments that we have, we're starting to see some money trickle in there. And the amount of portfolio drift that we've been seeing downward with the overall markets, such as like the S&P 500 or QQQ, we haven't been seeing the same fluctuations. And that's actually where we want to be. So I've been very excited to see that because it's a good test that if there is some sort of pullback, that we will be able to capitalize on not if, but when the market rebounds, if there's some sort of downturn, in order to get us the reasonable rates of returns that we want to see with our investments. Looking ahead into 2025, I like the way that we're positioned. I wouldn't worry about anything as of right now. Interest rates have been going up in 2022 when they skyrocketed and they were raised a ton. Now they've come down a little bit. So I mean, interest rates are something to watch out for. We could see some head fakes in the market where there's a pullback. If I saw a pullback of 5 to 10% in the market, I wouldn't freak out. I would look at that as an opportunity to take advantage of. And if or when that happens, I don't know when that might happen, we'll be ready. I'm super positive about looking towards 2025, regardless of what the outcomes may be. With deregulation, a strong dollar, and with the investments that we have strategically purchased in 2024, I am very hopeful to see some good results in 2025. In addition to that, you need to reach out to me. Feel free to call us on our new number, which is 904-746-9485. Or you can send me an email to josh@369financial.com, whichever you prefer. It doesn't matter to me. You can call or send a text to that number, or just drop me a line in the email, and I will make sure to get back to you as fast as possible. So now it's time to get to work. Have a happy, healthy, and prosperous new year, and I'll see everyone next time. Bye.